Lawful paths for a U.S. citizen seeking to end federal income tax and other compulsory taxes on ordinary commerce. The shortest accurate answer is this. Under current law, an individual U.S. citizen does not have a general legal right to refuse federal income tax because of moral, political, or religious objections. There is no ordinary, opt-out form that lawfully lets a person abstain from paying income tax on that basis. If the objective is to remove the federal income tax, the real lawful paths are political and constitutional, ordinary federal legislation, a constitutional amendment, or, more indirectly, a state-driven Article 5 campaign. If the broader objective is to remove all compulsory taxes touching ordinary commerce, that becomes a much larger project because federal, state, and local taxes arise from different legal authorities and would have to be changed in separate systems. What the typical U.S. consumer is actually taxed on. A useful starting point is to separate taxes into taxes on what you earn, what you buy, and what you own. In daily life, a typical American household is touched by all three, either directly or through prices. Tax Foundation's basic framework puts individual income taxes, payroll taxes, corporate income taxes, and capital gains taxes in the earn bucket, sales taxes, value added or gross receipts style transaction taxes, and excise taxes in the buy bucket, and property, estate, inheritance, and wealth taxes in the own bucket. Even where the legal payer is a business, the economic burden is often shifted onto households through lower wages, lower returns, or higher prices. At the federal level, the biggest taxes affecting ordinary consumers are the individual income tax, payroll taxes for Social Security and Medicare, and a set of indirect taxes embedded in prices. CBO's fiscal 2025 revenue infographic shows about $5.2 trillion in total federal revenues, with $2.656 trillion from individual income taxes, $1.748 trillion from payroll taxes, $452 billion from corporate income taxes, $195 billion from customs duties, and additional revenue from excise taxes, estate and gift taxes, fees, fines, and Federal Reserve remittances. That means the individual income tax is the single largest federal revenue source and payroll taxes are the second largest. For ordinary workers, federal income tax is collected on a pay-as-you-go basis. The IRS says most tax must be paid during the year through withholding or quarterly estimated payments, and workers above filing thresholds generally must file a return. For tax year 2025, for example, the IRS lists filing thresholds of $15,750 for a single filer under 65, $23,625 for head of household under 65, and $31,500 for married filing jointly when both spouses are under 65. Federal indirect taxes also matter to the typical consumer, even if they are less visible. The IRS describes excise tax as an indirect tax on specified goods, services, and activities such as fuel and airline tickets, and the 2026 Form 720 instructions show that domestic air transport is subject to a 7.5% percentage tax plus a domestic segment tax. CBO separately records customs duties as a federal revenue source, which means import taxes can also be reflected in final consumer prices. State and local taxes are a different layer. Census says state and local governments collect taxes by major category including property, income, and sales taxes, and its quarterly tax survey notes that state governments report more than 25 types of taxes, including personal income, sales, corporate income, motor fuel, motor vehicle, death, and gift taxes. Most local governments rely mainly on property taxes, though some also levy local income or sales taxes. Because the 10th Amendment reserves undelegated powers to the states or the people, removing federal taxes would not automatically eliminate state and local taxes. In practical terms, abolishing all compulsory taxes in ordinary commerce is not one reform, it is many separate federal and state reform campaigns. What current law allows and forbids. Current law does not give citizens a general conscience-based right to refuse federal income tax. The IRS's formal compendium on frivolous tax arguments states that the First Amendment does not provide a right to refuse to pay income taxes on religious or moral grounds or because a taxpayer objects to the program's taxes fund. The Supreme Court likewise held in United States v. Lee that mandatory participation in Social Security taxation could be required even over religious objection. That matters because many tax protest theories lead to penalties rather than reform. Under 26 U.S.C. Section 6702, specified frivolous submissions can trigger a $5,000 penalty. Under 26 U.S.C. Section 6651, failure to file or failure to pay can trigger escalating civil penalties. And under 26 U.S.C. Section 7203, willful failure to file, pay, keep records, or supply information can be prosecuted as a misdemeanor. So, as a legal matter, non-payment is not a lawful pathway to ending the income tax, it is exposure to penalties while the tax stays in force. There are narrow religious exemptions from some payroll-related taxes, but they are not general opt-outs from income tax. IRS Form 4029 expressly warns that approval exempts a qualifying member of a recognized religious group from Social Security and Medicare taxes only and does not apply to federal income tax. IRS Publication 517 likewise explains that certain clergy or members of recognized religious sects may request exemption from self-employment tax or FICA under limited statutory rules. Those exemptions are specialized, one-time, eligibility-driven carve-outs, not a general citizen right to abstain from paying taxes. There are also lawful relief mechanisms for people who cannot pay, but these do not repeal liability. The IRS says currently not collectible status can temporarily suspend most collection activity because of hardship, but the full debt remains owed and penalties and interest continue to accrue. An offer in compromise can settle tax debt for less than the full amount, but only if the taxpayer cannot fully pay and meets extensive compliance and financial disclosure requirements. These are debt management tools, not ideological opt-outs, and they require more paperwork, not less. The real lawful routes to ending the federal income tax. The most direct route is ordinary federal legislation. Bills begin only when a member of Congress sponsors them. An ordinary citizen cannot personally file a bill in Congress. House.gov explains that laws begin as ideas, a representative sponsors the bill goes through committee and floor votes in both chambers, and the president then signs or vetoes it. That means the average citizen's legal power here is indirect but real. Persuade a member to sponsor a bill, build co-sponsorship, pressure committees, and vote accordingly. As a matter of constitutional structure, Congress's power to tax income is an authorization, not a command. The 16th Amendment says Congress shall have power to lay and collect taxes on incomes. That wording means Congress may use the power, but nothing in the text requires Congress to keep an income tax in place forever. A strong practical clue is the structure of the Fair Tax Act of 2025. H.R. 25 would repeal subtitler of the Internal Revenue Code by statute, alongside payroll and estate, gift taxes, while separately expressing that the 16th Amendment should be repealed, and creating a 7-year trigger if repeal never occurs. That bill design strongly indicates that lawmakers can try to legislate away the income tax without first repealing the 16th Amendment, even if an amendment would be needed to make the ban more durable against future Congresses. This is a legal inference from the constitutional text and the bill's structure, not an express judicial holding in the sources cited here. The more durable route is a constitutional amendment repealing or replacing the 16th Amendment. Article 5 allows Congress to propose amendments by a 2/3 vote in both houses, and a proposed amendment becomes part of the Constitution when ratified by 3/4 of the states. National Archives notes that, at the current 50-state count, that means ratification by 38 states, and also notes that the President has no constitutional role in the amendment process. There is current precedent for the concept, even if not for success. H.J. Res. 14, introduced in January 2025, would repeal the 16th Amendment and declare that Congress shall have no power to tax incomes except in time of declared war. A third route is a state-driven Article 5 convention campaign. Article 5 says Congress shall call a convention for proposing amendments on application of 2/3 of the state legislatures, and Constitution annotated notes that this proposal method has never been used. That route appeals to people who distrust Congress, because it lets state legislatures, rather than Congress alone, force the amendment question onto the national agenda. But it also carries uncertainty. Scholars and congressional legal materials continue to debate how such a convention would be scoped and governed. In other words, it is lawful and constitutionally recognized, but institutionally untested. A fourth route is not repeal, but conscientious objection legislation. Congress has repeatedly seen peace tax fund proposals. For example, H.R. 4529 in the 117th Congress would have created a religious freedom peace tax fund. An earlier bill text provided that the Treasury would establish an account to receive taxes paid by designated conscientious objectors. That kind of reform does not abolish tax liability. It redirects or earmarks it. It also requires new eligibility rules, forms, and administrative tracking, so it is fully matched to a goal of shrinking bureaucracy. Which routes best fit a low bureaucracy, small government objective? If the stated objective is not merely different taxes, but less bureaucracy and a smaller federal state, then some pathways fit much better than others. A clean statutory rollback paired with spending cuts is the most coherent low bureaucracy model. The reason is scale. CBO shows that individual income taxes generated about $2.656 trillion in federal revenue in fiscal 2025, just over half of all federal revenues, and total federal outlays were about $7 trillion. Mandatory spending alone was about $4.2 trillion, with Social Security at about $1.575 trillion and major health care programs at about $1.819 trillion. Discretionary spending was about $1.9 trillion, split roughly between defense and non-defense. Net interest was about $970 billion. So any serious effort to abolish the income tax without replacing it would have to accept either much larger deficits or very large reductions in major programs, not just symbolic cuts to small agencies. If the philosophical aim is to shrink the state rather than shift burdens around, this route is the clearest match, but also the hardest politically. because it forces an honest debate over what federal functions to eliminate, devolve, or privatize. A constitutional repeal plus transition statute is the most durable anti-income tax model. If the real goal is, make it constitutionally hard for Washington to reimpose an income tax later, an amendment is the strongest instrument. Congress has used amendment ratification by state conventions only once, for the 21st Amendment that repealed prohibition, and National Archives notes that it is the only amendment ever to repeal another in its entirety. That is the best historical analog for anyone who wants not just temporary tax reduction, but constitutional repeal of a prior fiscal settlement. A fair tax-style national retail sales tax is more mixed. It plainly aims at many of the values the user identified. H.R. 25 says it would repeal the income tax and payroll taxes, abolish the IRS, and administer a national sales tax primarily through the states. But the same bill also creates a family consumption allowance, requires annual family registration, reimburses states and businesses for collection, and creates a federal-state administrative architecture. Tax Policy Center notes that the proposal would give states 0.25% of collections for administration, let businesses keep 0.25% to offset compliance costs, and provide a monthly universal family allowance. TPC also notes that the advertised 23% rate is tax-inclusive, equivalent to a 30% tax-exclusive cash register markup, and insufficient to replace current law revenues. Separate TPC analysis argues that high-rate national retail sales taxes are vulnerable to evasion and avoidance, and that systems that look simple on paper are often hard to keep simple in practice. In short, this route may reduce household annual income tax filing, but it does not eliminate compulsory taxation and does not eliminate bureaucracy, it mostly relocates it. A new federal VAT is even less aligned with the stated goal. TPC explains that a VAT is generally administratively more robust than a retail sales tax because it builds an audit trail through the crediting chain, and Tax Foundation notes that the United States is unusual in lacking a national VAT while relying on state and local sales taxes instead. But from the perspective of someone who wants to remove compulsory taxes or reduce the federal footprint, a VAT would mean adding or normalizing a new federal consumption tax, not ending coercive taxation. It may be administratively efficient, but it cuts against the stated political objective. An opt-out form or conscience fund model is the least compatible with an anti-bureaucracy project. The History of Peace Tax Fund Bills, Form 4029, CNC Relief, and Offer in Compromise all shows the same pattern. As soon as government offers individualized tax exceptions, it needs eligibility rules, certifications, payment routing, audits, and enforcement. That is not a path to smaller administration, it is a path to a more exception-heavy administrative state. What an average citizen can actually do. For an ordinary citizen acting lawfully, the most realistic playbook looks like this. Define the target precisely. End the federal income tax is a different campaign from end federal payroll taxes, and both are different from end all compulsory taxes in ordinary commerce, which would require separate state and local campaigns because tax authority is divided across sovereigns. Use the actual channels that exist. A citizen cannot introduce a bill personally, a member of Congress must sponsor it. The practical federal tools are contacting representatives and senators, pushing for sponsorship or co-sponsorship, and building organized pressure around committees and elections. USAGov provides official contact routes for federal, state, and local elected officials. Choose between a statutory and a constitutional strategy. If the goal is near-term repeal or large reduction, push ordinary legislation. If the goal is a durable constitutional bar on future income taxes, push an Article 5 strategy, either congressional proposal or state legislative applications for a convention. If Congress is the target, pair repeal with a spending blueprint. Because the income tax is the largest federal revenue source, a serious repeal movement that also claims to oppose debt expansion has to specify what federal spending would be cut, devolved to states, privatized, or sunset. Without that, repeal collapses into either borrowing or replacement taxation. If the states are the target, work through legislatures, not fantasies of unilateral abstention. Article 5 gives formal roles to Congress, state legislatures, and state conventions. It does not create a national ballot initiative route for federal constitutional change. A state-centered anti-income tax movement therefore has to win state legislative action and then, if an amendment is proposed, state ratification. Stay inside the law while campaigning. Current law still requires filing and payment above applicable thresholds, and generalized constitutional refusal theories are treated as frivolous. If someone cannot pay, the lawful paths are hardship or compromise procedures, not ideological noncompliance. Open questions and limits. This report is strongest on the federal pathways because those are the most uniform and well documented. It does not attempt a 50-state survey of state constitutions, referendum rules, tax limitation provisions, or local home rule structures. That matters because once the objective expands from end the federal income tax to remove all compulsory taxes from ordinary commerce, the campaign becomes jurisdiction-specific and must be fought state by state and often locality by locality. Another limit is that bureaucracy reduction is partly an evaluative judgment. The evidence is strong that the tax code's complexity imposes record-keeping, planning, computing, and filing burdens, and that even supposedly simple replacement systems can become difficult to maintain. But deciding whether a national sales tax, a flat tax, or a pure spending cut repeal is best, ultimately depends on constitutional priorities, distributional preferences, and tolerance for transition costs as much as on technical administration. Bottom line, for an average U.S. citizen, the lawful path to ending the federal income tax is not personal refusal. It is organized legislative and constitutional action. The most direct route is to convince Congress to repeal or zero out the income tax by statute. The most durable route is to repeal or replace the 16th Amendment through Article 5. The most anti-bureaucratic route, if taken seriously, is repeal paired with explicit reductions in federal spending and agency scope. By contrast, conscience-based opt-out forms and replacement tax schemes with rebates, allowances, and multi-layer administration tend to move bureaucracy rather than eliminate it. If the objective is truly no compulsory taxes across all ordinary commerce, that is beyond a single federal reform and becomes a long federal plus state constitutional project.
Okay, added on the back end to be a change of pace from a different thing. These are reports taken from ChatGPT, and the image is just because it was a female voice. I want to put that on it.